All right, Friday, December 22nd, 2023. The market just closed for the week, heading into the Christmas weekend. Just going to give kind of an introduction and an update. Update number one, this would be, I guess, what we'll call the $1,000 challenge, even though I'll be adding more funds to this account as we go. So we'll keep track of all of that. So we've got just short of $1,000 in this account. This account's going to be a little bit more of an aggressive style trading account using options, and we're going to be trading those options on a select few stocks to begin with. And we're going to start it here with Newmont Mining. I'm not going to go into full detail on why Newmont Mining, but they're one of the biggest, if not the biggest, gold mining company and metals mining company in the world, with mines all over the world. And they've recently purchased two other mining companies, and they're implementing those companies into their system. One was Gold Corp. They bought that a few years back, implemented them into their mix, and then they bought another company recently, I forget the name, another really big mining company, and they spent the last year implementing that company into their system, which is part of the reason why I think that they had a nice sell-off over the last couple of years. So whatever the case may be for the sell-off, the key time to buy is low, and in this case Newmont is definitely closer to its lows of what it should be valued, seeing as its high is up here at 86 and we're currently trading at 42. So a lot of upside potential in this market, and we'll start right here. So we're looking at a zoomed out version of Newmont Mining. We're at a weekly chart, meaning each one of these candlesticks represents a week's worth of time price movement, and we're looking at a chart that goes back 1, 2, 3, 4, 5 years. So the first thing that I like to do when I open up a chart and I'm analyzing where I want to buy, where I want to sell, I start by identifying explosive price movements on the chart, just looking for anomalous price action, price that really just stands out to you, movements that just really stand out to you. And looking at this zoomed out version, a couple of the areas that I would identify first and foremost, specifically as a buyer, would be this explosive movement that started down here around $33 a share and exploded up to around $67 a share, and then kind of went sideways for 2 years, a year and a half, and then exploded further to $86 a share from there, from that price. So this price movement here, as explosive as that is a significant support level when I want to be a buyer. So on this chart, I had placed price alerts on the way up for where I would like to be a buyer if this market ever were to pull back down to that price. And in this market's case, I had an alert down here that I figured would never hit. It was just an alert I had forgotten about. But I had been buying in right here and right here on these explosive movements and took my losses as this market broke the lows that were set here. And once those lows are broken, this market is showing us a potential downtrend, which it ended up being for the pretty much the remainder of last year, minus a really nice move from October to January. So this market has pulled all the way back into this zone here. Now we're interested in being buyers at this level, so we're going to zoom in and see what's going on a closer time frame. So we're going to look at like this area over here on a daily chart. All right, so now each one of these candlesticks represents 1 day's worth of price movement. And so as this market came into this territory that we had marked out as an explosive area, we see a couple things happen here. Well, first of all, let's identify this is a daily downtrend here. We have a series of lower highs and lower lows being created along this path here until we start to enter into this explosive area. And then once it enters into this price range, we get a huge spike of volume here. And before this huge spike of volume, this one here really stood out among the crowd. And so two things are happening here. This market is dipping into our potential explosive price area, and we're getting explosive volume happening. And then the third thing that happens is it dips a little further with a huge spike of volume preceding a nice explosive move up, breaking new highs over the downtrend of the current downtrend, creating a possible reversal in the trend and possibly marking this as the bottom here. So now that we have a new high and we've also pulled back and established a higher low, before exploding with a really nice $2 move on this day here, which is one of the biggest moves that it's had in a while. There was another one right here. Right here was another one, and that's also coming out of this green area here. So this is a nice signal, especially going from 33.50 a share all the way up to 42, 43 a share in just a couple of months since mid-November. And we're currently at late December, so a month and a half to make a $10 move to break new highs. So here's what we're looking at. We're excited to be a buyer in any pullback, any opportunities in this market. Let me just finish this section by pointing out a projected path forward, and I'm just going to leave those up and kind of see how it plays out. The timing and how fast it gets down here or up here will vary, stretch out in and out, but this is generally what I think is going to happen. We're making our way up, and we're looking to kind of break through each one of these resistance levels. Now we've kind of projected what we anticipate this market to do. So now let's talk about the strategy side of it. So we're going to be trading options on the underlying shares of Newmont Mine in this case. So here's the strategy. I have here just under $1,000 in the account. The money just cleared yesterday, and we're heading into this weekend here, and I didn't want to be left outside in the rain just in case this market decided to continue its explosive movement to retest this 45 level. So what I essentially did is I bought in to the market right here, which is kind of against what I would recommend anybody to do when I'm kind of teaching the strategy. Like, I wouldn't tell anybody to really buy in right after it's made this nice move. You know, I would say wait for it to pull back down to 38 or even to 40 before buying in. But in this case, I don't want to miss the move. I think it's a long-term move. So what I did was I bought a 6-month option. So if we look at my position here, this is the option I have. It's a 42.50 call option for June 2024, and it's currently worth about $400. Yeah, this option is currently worth about $400, and we can kind of project outwards of what this option would be worth if this market were to move in our favor or against us. This option has 182 days till expiration, so we've got plenty of time to work with. So we go back to the chart. Let's say this market wants to make a move down here to 38, high 38, like 39. That's a $3 move for that to happen. So when looking at this, the price of this option here, we do $3 to the downside, which in this case, here's a 250 move here because it goes in increments of 250. But if we move 250 to the downside, this option is going to lose about $85 as of right now, as of the current volatility. We're going to lose $85 on a $2.50 pullback. So we'll lose about $100 to maybe $120, maybe even $150, depending on volatility. Who knows if this thing pulls back as far as 38. So we're risking 100 to 150 or 80 to 150 for this pullback here. And the reward is this market continues to run, and we're in a nice long-term option that's going to take advantage as this market runs in our favor. So now that we have the 6-month option in there, we can see that I have about $600 left on the sidelines. That's to take advantage of any pullback. So if we do get this pullback either now or after this market reaches 45, whichever comes first, when we do get that pullback, that's when I'm going to go ahead and layer in this $600 with more aggressive position, either 1 or 2, whatever I can afford at that time. And that's going to be a 3-month option instead of a 6-month option. And what a 3-month option does is it gives you more leverage to the upside and the downside, which means any move down will hurt you faster than the 6-month option would hurt you, and any move up in your favor is going to benefit you more than the 6-month option would benefit you. So it's a little bit more of an aggressive approach. After the pullback, we layer on a slightly more aggressive approach, and if we get that bounce we're looking for to our next level, at that point in time we cash in that 3-month option and we buy 3 more months worth of time to make it a 6-month option. So then at that point in time, this pullback here doesn't hurt us as much. And if it comes back to this level, we're able to layer in a 3-month option and hopefully get that rally up to the next level to then turn that into a 6-month option. So we're going to be doing a lot of adjusting, but it's not going to really be day trading. We'll probably make a few adjustments a week. Sometimes we might not make any adjustments. We'll let the market tell us what to do next. We'll see what we can do with this account in the next weeks and months heading forward into the new year. Let me know what you guys think and follow along for the updates, and I'll see you on the next one.